and we will be returning on March 23rd. We're in the final stages of scheduling our speaker, and we'll be in touch over email to announce that in the next week or so. As always, we love to hear your feedback on our webinars and would love to know what topics you're interested in learning more about. Please always feel free to contact me with suggestions or ideas for future webinars or changes you'd like to see in our current webinar format. As you all hopefully know by now, the 2017 Annual Energy Conference is scheduled for June 7th and 8th at Skamania Lodge. We ask that you mark your calendars as such. Our sign-up page is now live at nwga.org, so please go there and make it official and get signed up. We're going to be doing a prize drawing for each month for registrations received during that month, and we encourage you to enter now, as we just received our first registration yesterday, so your chances are never going to be any better than they are today. Finally, I'd like to introduce the Northwest Gas Association for those of you who might not be familiar with us and what we do. We represent the 6 investor-owned gas utilities operating in the Pacific Northwest, along with the 3 large natural gas transmission lines. Our members are located in Oregon, Washington, Idaho, and British Columbia. As always, please visit our website at nwga.org for more information, or send me an email at creiten@nwga.org. And without further ado, I will pass things along to Richard.
Thank you, Connor. Glad to be with you all today. I'm going to wait to grab this presentation from Connor, share my screen, and let's get this presentation underway. Connor, can you hear me all right? And can you see the presentation?
Hey, Richard, are you there?
I am here. I don't think that was me.
I don't think so either. Sorry about that. It looks like someone got around the mute function, but we should be all good here.
That's fine. Can you see my screen and you can hear me okay?
Yep, both look good.
Great. Thank you, everyone. Again, appreciate the introduction, Connor. My name is Richard Meyer. I am a Director of Energy Analysis and Standards here at the American Gas Association. For any of you on the call that aren't familiar with AGA, we are the National Trade Association for Natural Gas Utilities. We are located here in Washington, D.C., right by Capitol Hill. As I said, I'm part of our Energy Analysis and Standards team, and we've been described as the consulting arm of AGA. And what it is that we do here is we do the data, statistics, and analysis that interacts with and intersects with a number of different areas of the association. So we work with our communications group, our federal and state affairs, data collection for our operations and engineering. It really depends on the topic. So in other words, we do research and we provide the information both to members and different areas of the association to support advocacy in all areas that AGA works in. As far as my role goes, I'm a director of emissions and large volume markets. I do supply, demand, and pricing statistics. And part of my role last year was shepherding a kind of a group project looking at the natural gas commercial sector. Moving to slide 2, which really just a title card to describe a little bit about what we did in this report and before I get into the findings. So what we do every year at AGA and within our group is we will do a deep dive into one particular topic. And last year was the release of a brand new data set from the Energy Information Administration. They released new survey data, the survey taken in 2012. They released new survey data on commercial building characteristics and energy consumption. This is the so-called CBEX data, and I'll refer to CBEX a number of times throughout the rest of this presentation. So we said, wow, this is the first time in a decade that we've had a look at what's happening in the commercial building market in terms of, changing characteristics, in terms of energy consumption, and it gave us a glimpse in particular into what's happening with the natural gas, the commercial sector of the natural gas market, the commercial segment. So we did a deep dive into the commercial sector, starting with an analysis on the CBEX data, and then it blossomed into really just a kind of comprehensive look at various trends, statistics, and various outlooks of the commercial sector. I know a couple commercial sector facts just to get us started. And natural gas represents about 18% of primary energy consumption, and natural gas utilities serve most of the volumes, 99%, according to the most recent statistics. So that is to say, natural gas utilities serve 99% of the volumes delivered to commercial customers. This is obviously a very important segment of the natural gas market to natural gas utilities, and we want to take this opportunity to understand what are those trends and characteristics that help define not only this kind of broad category, but the diversity of the customer base within it. What is the commercial sector? And that is part of what we tried to define starting into this report. This report that we created seeks to unveil the diversity within the commercial segment of the gas market. And we want to shed light on the range of customers, technology, and end uses that serve this important backbone of the U.S. economy. The commercial sector is typically defined by what it is not, because it's so encompassing. So the commercial sector is not residential, it's not manufacturing, and it's not agriculture. Instead, it represents all those other businesses and services and public activities within the U.S. economy, which include education, healthcare, public order and safety, service facilities, food sales and service, hotels, retail, and public assembly. I mean, you can go on, and on slide 3 here is a very busy table just to kind of convey the diversity within this commercial segment. So what we did is in this report, and there's a link to the report at the bottom of the slide here, on slide 2, we sought to define the commercial sector through a variety of metrics. So we look at volumes of gas served customers, prices, expenditures from those customers. We looked at specific building characteristics and fuel use, and a lot of that derived from the analysis of the CBEX data, which I'll talk about in a second. We wanted to understand the kind of broader and larger economic contributions that the commercial natural gas market provides the overall U.S. economy. So there's a kind of macroeconomic dive that we did as part of this report. We took some time trying to understand the role of codes and standards helping shape safety and efficiency trends within the commercial building space and the commercial gas market. And finally, we take a look ahead, try to understand what are those growth opportunities, where might some challenges be, and what's that look ahead for the gas industry within this segment. I spent a lot of time in this preamble. A lot of great information in this report. Go take a look. But let's just dive in, and I'll share in various ways the different findings we uncovered through our investigation of the commercial sector, just to define how big of a segment is this within the overall gas market. Commercial customers represent only 13% of all deliveries of natural gas volumes to end-use customers. So again, it's along with residential, it's about 30% of the market, but that third is almost entirely served by gas utilities. Again, a very core market to the nation's local distribution, natural gas distribution companies. Kind of stepping back and looking just at the commercial sector itself, and we ask, what is overall energy consumption within this sector? What are the trends over time in terms of not just natural gas to commercial customers, but electricity sales, maybe other fuels, petroleum. And so we looked at data provided by the EIA, and what they do is kind of interesting, and I want to put this end-use sales in a little bit different context. So what's happening in this chart is commercial sector energy consumption over time. This is in quadrillion BTUs, starting in 1950 and all the way up until the present. The bottom is natural gas, and those sales to commercial customers have largely been flat for the last 40 years. Slight upward trend. We'll talk about that in a second. Electricity sales have grown as more electric using devices being adopted by commercial customers. But what's interesting is if you include the system losses associated with those electricity sales, that is to say the energy or thermodynamic losses associated with the generation, transmission, and distribution of electricity, that accounts for more than half of total primary energy consumption in the commercial sector. This is a fairly compelling chart for a number of reasons. It suggests opportunities for energy efficiency. It suggests opportunities where the direct use of natural gas can reduce overall primary energy consumption. I'm not going to spend a lot of time on this since there's a lot of other data to go through, but just an interesting finding when you kind of stack up the primary energy components in this way. Connor, I will say that if there's any questions that you're getting as I go through this presentation, feel free to just interrupt me if you see an appropriate question given where I'm at in the slide deck. Otherwise, we'll obviously come to Q&A later. Okay?
Sure, sounds good, and that's a good reminder for everyone to use the chat function below and just to ask them as they come up, and we will get them asked. Thanks.
All right. Moving along through our findings, there's about 5.4 million natural gas customers. Over time, starting now in 1970, the U.S. natural gas customer base in the commercial segment has just about doubled. So steady growth in the total number of commercial customers. However, we also found that efficiency is core to this market. And similar to the residential sector, if we look at the amount of natural gas used by a customer, so the average use per customer on a weather normalized basis, that use per customer has been going down generally over time. This is so about 19% reduction in overall commercial customer gas use on an annual basis from 1970 to 2015. So that's about 0.3% per year, 0.3% per year. Driving this trend, this efficiency, this broader kind of efficiency trend and conservation trend has been improvements in appliance efficiencies and tighter building shells. Population migrations to warmer climates. So, if you move from the north to the south, you're just not going to use as much natural gas. Conservation efforts and historically priced induced conservation, especially when gas prices were higher than they really are today, as well as the effectiveness of utility-sponsored energy efficiency programs. We don't attempt to quantify the contributions of each of those elements to this trend, but we do note that all of those elements do make some sort of contribution to this kind of broader efficiency story that we see within the commercial market. As a result, I don't have a chart for this, but if you look at natural gas consumption over time, it has, in the commercial sector, it has risen, and I had the stat, and so natural gas commercial volumes have grown about 0.6% per year. So we've doubled the number of customers, but the amount that every customer is using has declined, and so it results in about a growth nationwide of about 0.6% per year. Now we're getting to some of my favorite findings, and I do want to kind of stop and say that this is, at least to me, among the most important findings of this exercise, and it really is it's about price declines and what commercial customers are paying for natural gas. And when we look at the data in 2016, it's the lowest since 1976. That is to say, when you look at commercial retail prices on a national basis and adjust it for inflation, commercial customers are, on average, paying the lowest prices since the Ford administration. This is a tremendous story from our point of view in Washington, where not only are consumers saving more energy, but they're spending less for that energy, and natural gas in particular. Those lower prices translate to lower bills, and commercial gas utility bills arrived at a new low in 2015. In this case, 2015 is the most recent year we have data. What we're seeing here on slide 9, this is kind of a range of pricing data. This is monthly natural gas utility bills for commercial customers. This is part of AGA's bill comparison survey. Maybe a number of your companies do participate in this AGA survey. And this is the average bill for a commercial customer that consumes 500 therms. and the monthly utility bill. So, as to say, so we've seen utility bills are now at the lowest since we've started collecting data. So back to 2003 was the first time we did the bill comparison survey, and utilities bills are about half of what they were in their highs during 2008. So customers are saving more money. This, in terms of the economic contributions to the broader contributions to the broader economy, I should say. Commercial customers are paying less. This is a vital backbone of the U.S. economy, and lower energy prices, lower energy bills means these businesses, small and large businesses, and others can create jobs. Can grow the middle class and expand their business, and it helps contribute to an expanding U.S. economy. Just as an aside for a second, when we kind of understood these findings, we realized that there was what we hope to be a fairly politically salient message given the changes in Washington, D.C., and the focus on the economy, the focus on manufacturing and those segments that where energy really is so important to growing business, and so to again to help quantify what those contributions have been, we did a little kind of backcast analysis, and we said, all right, so given these savings, these lower monthly bills that commercial customers have been paying, how much have they saved? And we estimate that up to $76 billion in savings have gone back to American businesses, and the commercial segment in particular, since 2009, really since the start of the shale revolution. So again, really, not stunning finding, but one that we kind of opened our eyes to and said, wow, this is really important and a great story that we need to continue to tell. I'm gonna move on, but if any of you have any questions in the Q&A, happy to revisit this topic. Going back now to some of the nitty-gritty details in terms of what is happening in the commercial market, those trends and characteristics. We note that most natural gas is that's consumed in commercial buildings, most of that's for heating, cooking, and water heating. There's some miscellaneous use as well. The diversity of end uses try to capture that, when we say heating or cooking, there's actually a whole, swath of different technologies that apply to a variety of market applications within the commercial sector. This chart I'm showing you is courtesy of the Energy Solutions Center, and this is their attempt of showing each row is a different market, a different technology and or application, and the different segments going by column where those technologies might apply. So just looking at the top left corner, boilers, being used in colleges and universities. I'm not going to spend a lot of time on this. It's all in the report, of course. Again, trying to convey a sense of diversity in terms of the end uses and the different customer segments that can use natural gas under this commercial umbrella. In addition to energy prices helping define that kind of core value of any particular energy technology, there are other intangible factors that might help shape a customer choice, picking one of these technologies in a different for various end uses. So that includes equipment cost, overall seasonal efficiency of this technology, auxiliary electric costs, maintenance costs, air quality, noise levels, and comfort. Think about an outdoor natural gas heater, for a restaurant. That's a particular kind of niche application, but one that, again, thinking about the diversity of how we can share the range of natural gas uses in the commercial segment, how businesses can utilize this fuel. Going back to some of those macro trends again, This is really the start of some of the analysis that we did from the CBEX data, and note that two kind of important trends over time have emerged. One is that total commercial floor space continues to increase, now up to about 87 billion square feet in 2012, again, the year with the most recent data. And but the number of commercial buildings has also increased, but slightly less quickly. What that suggests to us is that commercial buildings are just getting bigger. Not a surprise. Our homes are getting bigger on average. That's been a long-term trend. So, and that's also similar for the commercial sector, where commercial office buildings and other commercial space are getting bigger. So every new building, that is to say, is bigger than it was before. Interesting to note that about half the building stock has been built before 1980. So our commercial building stock is aging, and this suggests some opportunities for energy efficiency improvements and interactions with those customers that might be looking for retrofits or upgrades. And only 20% have been built since 2000. So to give you a sense of really only a fifth of the market, the commercial market being built since 2000 suggests again an aging building stock. The share of commercial buildings using natural gas increased slightly by about 1% between 2003 and 2012. When we dove into the CBEX data, it gave us an opportunity to look at, well, what were those changes in natural gas use, not just in the broad commercial sector, but by specific building type or category. They break it down in the following ways. So you can define an office building, non-refrigerated warehouse, education, so colleges, universities, elementary schools. And generally speaking here, overall commercial building space increased in all these various categories, except you'll notice at the bottom here, enclosed malls shrunk as in terms of total building square footage. I guess just the country moving away from malls, and the refrigerated warehouses as a category also shrank. But in general, the whole commercial building stock has gotten bigger. As I mentioned, the natural gas share of commercial floor space, it increased very slightly. It's actually less than 1% here, so it shows up as 0. The share of natural gas buildings, so let me back up for a second. What we're looking at here is commercial floor space and the share of commercial floor space that uses natural gas. So that's to say 68% of all commercial floor space out there is designated to use natural gas for some end use. They raise their hand and say, yes, I use natural gas. So then you're flagged as commercial floor space and get thrown in that bucket. So 68% of the total commercial market in terms of floor space uses natural gas. That didn't really change over the past decade. So what that says to us is if the share of floor space didn't change, but the overall floor space is increasing, well, there is some organic growth there, that the commercial sector is growing, but it's not growing as a result of capturing more share. It's rather just growing because the whole market is expanding. More buildings are being built, so on and so forth. One other thing I'd point out here is just noting where natural gas tends to be used. So that is to say, if enclosed malls, inpatient healthcare, so hospitals, hotels, nursing, so nursing homes, education, so universities again, these on a nationwide basis tend to be the categories that are the commercial categories of buildings that are using natural gas or have a higher share of buildings indicating that they use natural gas. So really an important market segment. And I'll come back to some of these in a minute when we try to define the economic contributions of these categories in terms of natural gas sales. We take a look at main space heating equipment in commercial buildings. Kind of depends on how you want to define things, but they the CBEX data does track main space heating equipment, and what we're looking at is the main space heating equipment in commercial buildings that use natural gas for their main space heating. And if you look at the different types of technologies by the share of buildings, packaged central units, roof-mounted units are predominantly the technology used for their natural gas main space heating. Individual space heaters, furnaces, also used. If you look at share of consumption, so which technologies are using the most natural gas in those buildings that use natural gas for their main space heating, packaged central units and boilers really dominate the market there. Again, you can actually do this data dive on a regional basis. This is just a national view. I will say I'm going to come to some regional views in a second, but we have not done too deep of a dive on a regional basis. We tried not to for brevity's sake, but we do plan on doing more of that this year. My first of two regional slides. Generally speaking, there are more commercial buildings in the South, but the Midwest retains the highest natural gas share. I'll focus just on the bottom for the Mountain and the Pacific regions. Again, the first column is the total number of buildings in thousands that use natural gas, those are the total number of buildings in those regions. And then the gas share, that's the percentage of those buildings in the second column that use natural gas. And similarly for the third and fourth columns, that's total floor space in that region and the natural gas, the share of natural gas buildings of that floor space. So, the bottom right, 67% of the floor space in the Pacific region is designated to use natural gas for some end use. So we, again, a deeper dive into what's happening on a regional basis. And, unsurprisingly, the, east, north, central, parts of the Midwest, larger, shares of natural gas buildings, just given the, the high heating demand. I hypothesize because of the high heating demand. So in Wisconsin and Michigan, for example, higher shares of natural gas used for space heating and other applications there. Again, a regional view, but one where the conclusions are broadly shared, and that is to say that gas buildings or commercial buildings that use natural gas tend to be bigger than those other buildings, those that might use only electricity or have fuel oil for heating, a heating fuel, for example. And just a couple statistics I'll point out. The average commercial building with natural gas is about 20,000 square feet. This compares to about 15,700 square feet for commercial building fleet as a whole. So again, if you have natural gas, you tend to be larger than the commercial building counterparts that don't. I mentioned economic contributions, and one of the tools we have here at AGA is a macroeconomic model, an econometric model that helps us define the macroeconomic contributions of different industry segments. So that is to say, how do we understand the total number of sales or jobs or contributions to GDP from different segments of the economy? And we were interested in understanding, what does this model, based on publicly available government collected data, what does that have to say about the commercial market? And one view here, this is LDC revenues in billions of dollars. So this is the amount of, basically just bottom line sales from LDCs across, the commercial sector. In the past, those have varied and largely varied as a result of, higher usage, but in particular higher prices. As this model projects forward, prices are going to stay relatively low and stable, but there is about a 26% increase from the present to this only shows to 2030, but to 2040, about a 26% increase in sales. When we break it down by industry, so those gas-using industry, so of all, excuse me, let me back up, of the entire U.S. economy, this model segments down to about 160 different industries. About half of those use natural gas or have LBC sales as an input to it. So this is, we're defining most of those as commercial in this case. All but 4 show increasing gas sales to that industry or to that economic segment over time. Only 4 have declines. The top growth, or excuse me, I should say the top contributors in this case, so natural gas LDC revenue coming from real estate, medical offices, office buildings themselves. So when I referenced earlier about where those gas shares are highest, that corresponds well with this other model where we're looking at, where are the gas sales going in terms of, trajectories through the U.S. economy, and we see similar categories in this exercise as well. I wanted to pull out actually I asked myself today, what are the 4 categories where we're going to see declines, and these industries include legal service, which my colleague informs me is because of consolidation in that segment, automotive repair, family community services, and civil, social, and professional organizations. So just in case you're curious about how that is defined, be happy to revisit that too in the Q&A. The final portion of our report was us saying, okay, what's the look ahead? What's next for the industry? I hinted at some of that in the excuse me, the economic contributions in our REMI model in the prior slide. Here we're going back to natural gas consumption in the commercial sector and relying upon the Energy Information Administration's long-term view of energy and in particular natural gas consumption for commercial customers. This chart is based on the annual energy outlook for 2016. I'll talk about the 2017 that just came out. It looks similar, but there are some differences. But we'll focus on what's here, and this is the graph that appeared in the report. A few things to note, starting at the bottom in blue. Space heating demand for the commercial sector actually declines slightly over time through this projected period through 2040. That's about 0.3% decline in space heating. Again, this is the government's view, their reference case projections of natural gas space heating in the commercial sector, and so they see about a 0.3% decline per year, I should say, decline over time. Water heating demand and cooking largely stay flat. It's this top piece that was kind of interesting, and I was diving into that. They see that this other category grows about 1.8% per year over the projected period. They define other as including miscellaneous uses such as emergency generators, combined heat and power in commercial buildings, and manufacturing performed in commercial buildings. So there is sometimes some crossover between how you define commercial versus manufacturing or industrial, and some of that non-industrial manufacturing gets wrapped up into this category here. They do see, in general, a large contribution, as far as I can understand, their projections include growth in combined heat and power in the commercial space, and that includes, single-digit growth per year in recip engines, in micro turbines, in the in fuel cells as well. So, they see growth, albeit modest, but nevertheless growth of combined heat and power applications in the commercial segment. I will note that this reference case includes the Clean Power Plan. And the Clean Power Plan, as they see it, will create higher commercial electricity prices. as a result of this of the EPA Clean Power Plan, and that will contribute to the increased use of DG technologies. And that's directly from EIA's kind of report on this itself. I will note that I was looking just yesterday at the new projections from the Annual Energy Outlook 2017. So this is this year's version of the chart we're looking at. As it were, the total consumption actually remains unchanged in terms of percent. But a couple interesting changes. One, space heating consumption is actually a little bit lower in this year's AEO than last year. That is to say, the baseline from which they are starting is lower. The reason for that is that they incorporated the CBEX data. So some of the info that I had just been going through on commercial building characteristics and energy consumption, what they discovered is that the trend line in space heating for commercial sector has actually been going down more quickly than they had thought. It may be accelerated. I don't really understand exactly yet. I need to dive in. But what this has also changed is not only the baseline from what you're starting from in terms of the space heating component, this blue piece here, it's a little bit lower. I think it starts about 1.3 quads currently instead of 1.6 as we see here. But it declines more quickly. And space heating declines between 0.5 and 0.7% per year through the projected period. And that percentage depends on whether you assume the Clean Power Plan or not. It actually goes down a little, I believe, faster with the Clean Power Plan. So some interesting kind of look aheads here. Stepping back from the weeds for a second, we do see in general growth in this market. And that growth may come from distributed generation technologies like combined heat and power. One more CBEX slide. Per that growth opportunity, we did identify a number of buildings that indicated they generate electricity on site, that they have that they have natural gas on site, but they don't use that natural gas for electricity generation. This makes sense if you're doing emergency testing or you have a diesel backup generator, but you have natural gas service for your space heating or water heating or cooking. That makes a lot of sense. But what this suggests is that there may be a growth opportunity to figure out how to target those customers that have gas service, and they have, they generate electricity on site, typically maybe a backup application, and perhaps we can target those customers more quickly since they already have gas service itself. In this case, there's about 150,000 commercial buildings identified that do not use natural gas for electricity generation but have natural gas for some other application. Then there's another 150 that have some sort of backup generator or on-site electricity generation, but they don't have gas service at all. Finally, continuing with the look ahead, just a couple seconds on carbon dioxide emissions. Historical data on the left, the AEO reference case on the right, so the projected period. Just a couple things. One, natural gas CO2 emissions, largely flat over time in terms of the commercial sector. Nearly all of the contribution in CO2 emissions from the commercial sector came from greater electricity usage and the carbon intensity of the electricity serving those sales. But it's turned around. The electric sector is decarbonizing. How quickly you think that's going to happen will shape your view of the right-hand side of this chart. And certainly there's a regional view here that it will look a lot different in the Pacific Northwest than it will in the South, than it will in the Northeast. I don't have this data on a regional basis. It's not released from EIA on a regional basis as far as I know. But from a national view, making the case that gas is already a low-emitting fuel, serving a substantial portion of our energy consumption in the commercial sector, and that the real areas of decarbonization are in electricity themselves. We do note that competition remains stiff and electric appliances are advancing. We believe natural gas to be a low carbon solution that can be applied today. It not only lowers costs for consumers, but can lower overall carbon emissions. But as you know, going ahead, there will be challenges to that, and there already are challenges, as I know many of you are familiar with in the Pacific Northwest in terms of that message. And as electric appliances advance, as the electric grid becomes, lower carbon over time with the adoption of more natural gas and renewables, especially, that story that we're trying to tell in terms of a low carbon emissions of gas appliances, it does become more challenging. I believe this is my last slide. Finally, just a kind of high-level summary of where we see clear opportunities to expand natural gas service to commercial customers. First off, just given the political environment here in Washington, D.C., and what many policymakers and regulators across the country are always caring about, it's the economy, stupid, right? And one of our top line messages is that you can leverage natural gas as a tool for economic growth. One way that we try to demonstrate that is by noting that there are 39 states across the country that have some sort of expansion program or policy on the books. That is to say that this program or policy is designed to help incentivize the expansion of natural gas infrastructure, distribution infrastructure. And we call out 3 states in the report, Tennessee, New York, and Mississippi. And all 3 of these states have a program specifically designed to encourage economic growth through the expansion of natural gas service. That is to say, we're going to help address those cost effectiveness regulatory barriers and get that extra mile of pipe built so that customer at the end of the line can reduce their energy costs, and there will be knock-on economic effects from connecting that customer to natural gas service. So I highly encourage you to go through. Again, that report has some details about those state programs and what's happening in those 3 states in particular. Moving down the list here, we see opportunities to promote new technologies to improve energy services, lower costs, reduce emissions. I mentioned some of the challenges from the electric sector and the stiff competition of electric using devices. It's incumbent upon the gas industry to continue to develop its own low carbon or low energy or low cost natural gas solutions. And that includes different types of distributed generation technologies, gas heat pumps, micro CHP, fuel cells even. And so we not only identify there's a opportunity to promote these technologies, but is incumbent on industry to continue to help develop them. Replacing heating oil with natural gas, that's especially an opportunity in the Northeast. And finally, leveraging existing energy efficiency programs to meet broader economic or environmental policy goals. How do we then take those gas utility energy efficiency programs that target commercial customers and make the case for why using the natural gas directly in homes and in particular businesses can help meet our broader economic and environmental policy goals. I've thrown a lot at everyone on this call. I've been talking for a long time. I hope everyone's still there, and I look forward, Connor, to any questions that may have come from the audience here. And just to preempt everything, I appreciate your time and attention today.
Great. Thank you, Richard. We do not have any questions at this point, but we're going to give folks a few minutes to do that. Again, please type your message in the chat box so we can get those answered. We'll give you about 3 minutes to type those in. And in the meantime, I just really want to thank you, Richard, not only for the great work that you and your team are putting in on this, but also for taking the time to do this with us today.
Well, I appreciate it.
Also want to take this opportunity to remind folks that we do record these and we upload them to our YouTube channel. If you want to send me an email looking for this slide deck, I'd be happy to respond with both the slide deck as well as the link to the YouTube link. So just give me an email.
Well, I will say a couple more remarks in terms of what's next for us. We have shared this report with the press and other stakeholders. This is part of our stakeholder outreach. I hope you find it useful. If any of you on the call read the report or see information that you think maybe is lacking, we've gotten some of that feedback already. Areas and maybe other data sources we could have included. Our intention this year is to follow up on this analysis with a more regional dive. So again, maybe, I showed you national cuts of a lot of this data. Where there's an opportunity to take kind of a more regional look at some of these questions, some of these characteristics, we want to do so. So if there's anything in particular that you thought interesting or helpful in your with your businesses, your advocacy, what it is you're trying to accomplish, and any of this analysis might be useful on a regional basis, please give us that feedback. It really helps us focus our time and attention where we direct our our resources and our research. So I will just leave it at that.
That's great. Yeah, thanks again, Richard. I am not seeing any questions, so in the absence of those questions, I think we will sign off and look forward to seeing everybody next month on March 23rd.
All right. Thank you, Connor, and thank you, everyone. I appreciate your time today.
Yep. Bye.
Bye-bye.
Thanks.